There's a strange conversation that started happening at dinner parties in Palo Alto and on private jets crossing the Pacific. It starts off normally, talk about market volatility, AI, the usual, but then the tone shifts. It gets quieter. Someone will lean in and mention their Kiwi project. It's code. It's not about investing in a new app. It's about the landing strip they've secured access to near Queenstown, or the new water purification system they've installed in their bunker, which is what they call their multi-million-dollar holiday home. And what's wild is how casually they discuss it, as if buying a backdoor residency to another country is just the next logical step in diversifying a portfolio. To them, it's not paranoia, it's just good risk management. They're no longer just hedging against a market crash, they're hedging against societal collapse itself. They see the political division and the social unrest boiling over back home, and they've made a cold, rational calculation. They're buying an insurance policy in the form of passport. And right now, it turns out New Zealand is having a fire sale. Okay, let's unpack this. That opening anecdote. Wow. It really captures this unsettling feeling, doesn't it? This sort of detachment.
It really does. It sets the stage perfectly.
So, yeah, what we're really digging into here is basically the transactional side of, well, stability, geopolitical stability. We're looking closely at New Zealand's revamped Golden Visa program. It's officially called the Active Investor Plus Visa, or AIP.
Right.
We want to understand what it actually is, why the government made such drastic changes to the rules recently, and maybe most importantly, what all this tells us about how the super wealthy are thinking about, global risk these days.
Well, what's really fascinating, I think, is this core tension that the policy just forces New Zealand into. I mean, on one hand, you've got the government, and they're not shy about it. They're pursuing this going for growth agenda.
Right, going for growth.
They want that immediate high-quality capital injection. They genuinely seem to believe this is crucial for boosting the whole country's economic productivity.
Right.
So they're actively, rolling out the welcome mat for these investor migrants. But in doing that, they're also kind of cementing this reputation, aren't they, as the world's sort of premier escape hatch.
Yeah, the go-to plan B spot.
Exactly. And that generates huge societal friction back home. It really forces them to face this, well, frankly, uncomfortable question. Is national stability, is citizenship itself something that you can, or even should, sell off to the highest bidder?
It feels like a real clash, doesn't it? This sort of cold, rational economic calculation hitting right up against a much more emotional, maybe ethical idea of what a country is.
Trading social cohesion, potentially, for economic stimulus.
And that's really the core of the whole debate, isn't it?
It is. And you see this trend globally, right? Wealth is becoming more mobile, and governments, well, they're increasingly desperate for capital. So, okay, our mission today is pretty clear, I think. We need to really analyze these recent, quite drastic changes to the AIP visa rules, the ones that caused this immediate surge in people applying. Then we've got to look at the economic thinking behind it all. What's the strategy for attracting this foreign money? And finally, yeah, we absolutely have to dig into the ethical side, the societal costs that come with turning residency into, well, a global risk management tool.
Yeah.
Especially when you look at that Plan B thinking coming out of places like Silicon Valley.
Right. And this is where it gets really interesting, because when New Zealand announced these changes back around April 2025, this wasn't just tweaking the rules, it was a complete overhaul.
Radical.
Totally radical. It was a central piece of that whole going for growth strategy you mentioned. And it felt like it had this really aggressive, almost defiant goal: pull in $1 billion of new productive investment by the end of 2025.
$1 billion.
Yeah.
It's a serious number.
Yeah.
And to hit it, yeah, they basically created a VIP lane for global capital. They systematically took down almost every single traditional barrier. The things that high net worth individuals just find annoying or slow.
Like, specifically?
Well, if you look at the key concessions, it tells you exactly who they're trying to attract. The old investor visa. It was complex, had this high single investment threshold. That's gone. Replaced by two much clearer, simpler options, and actually slightly lower thresholds too.
Okay, simpler and maybe a bit cheaper. But it wasn't just the money, was it? They got rid of other things too.
Oh, absolutely. And this is crucial. They eliminated requirements that used to signal, some kind of commitment to actually becoming part of the country. Most notably, the English language test. Gone. Scrapped entirely.
Wow, that's a huge concession.
It's massive. It basically says to applicants, look, assimilation, fitting in, that's secondary. Your capital, that's primary. If you've got the cash and pass the security checks, language doesn't matter.
And what about actually living there? I heard that changed too.
That's maybe the most telling part. It really stunned a lot of local commentators.
Yeah.
The residency obligation. For the main investment stream they want people in, it was cut to this, frankly, astonishing minimum, just 21 days over the entire 3-year investment period.
Wait, 21 days? Over 3 years.
21 days. Think
Yeah.
about that. 3 weeks of physical presence across 36 months. I mean, that's barely a holiday. It feels like selling digital status almost. A right to live there, but without demanding any real physical or, cultural commitment.
It seems like they just want the money parked there, essentially.
Well, and they've made the process incredibly fast, too.
Yeah.
The admin side, supercharged. Application processing time is down dramatically, apparently averaging just 11 days now.
11 days. That's faster than getting a standard visitor visa sometimes.
Exactly. It's not just efficiency. It shows it's an explicit government priority. Fast-track these applications, get them ahead of almost everyone else trying to immigrate.
Okay, that really underlines the transactional nature of it all. Speed, volume, minimal friction for the global elite. So how did they structure the actual investments? You said 2 paths.
Yeah, 2 distinct paths. The idea is to steer the money into productive assets, not just let it sit in a house. They're trying to incentivize different levels of risk and commitment. You got the growth category and the balance category.
Okay, let's start with growth. That sounds like the one they prefer.
It is. That's where they really want the capital to flow. This path needs a minimum investment of NZ $5 million, and it's over a 3-year period. It's designed specifically for higher risk, what they call active investments. So direct investment into NZ businesses or into managed funds that NZTE, that's New Zealand Trade and Enterprise, has approved.
And the payoff for taking that higher risk.
That's where the residency obligation comes in, or rather, the lack of it. That minimal 21 days over 3 years applies to this growth category. The policy basically says, look, commit to higher risk productive investment that might actually grow our economy, and we'll trade that for your commitment to actually live here.
So lower threshold than maybe expected, shorter duration, almost no need to be physically present, but the money has to go into something potentially useful, something riskier.
Precisely. It's a calculated bet on getting quality investment, not just passive money.
Okay, that makes sense. So how does the balanced category compare?
Right. So the balance category shifts the balance, you could say. It's the lower risk, more conservative route, but it requires a much higher minimum investment. NZ $10 million.
It's double the growth category.
Yep, double. And the investment period is longer too, 5 years instead of 3. And because the capital risk is lower for the investor, the government demands more commitment in return, specifically, more physical presence. You need to be there a minimum of 105 days over those 5 years.
Still not exactly full-time residency, but significantly more than 21 days.
Definitely more. And this stream allows for a mix of investments. You can put money into listed equities, manage bonds, and also property development, which is interesting.
Property. That's always a sensitive point in New Zealand, isn't it?
Hugely sensitive. So they're quite prescriptive about where the money goes across both categories, but especially with property. This is their main defense against just selling passports. They've targeted specific sectors approved by NZTE, high growth stuff, tech, advanced manufacturing, food and beverage, renewables, aged care, infrastructure.
Things that build the economy.
Exactly. And they're super careful about housing under the growth category. Pure property investment is totally out. No buying existing houses.
Okay.
Property development is allowed under the higher $10 million balance category, but with strict rules. It has to be for new developments, residential, commercial, industrial, that actually increase the housing stock, not just buying a single mansion.
So building new apartment blocks might be okay, but buying a beachfront back isn't.
That's the idea.
Okay.
Direct the money towards construction, towards economic activity, not just speculation that pushes up prices for existing homes. And critically, you can't use that $10 million investment to buy a luxury home for yourself or your family to live in.
Right. So the structure seems thought out, aiming for productive investment. But did it work? What was the immediate reaction?
Oh, the immediate impact, just in terms of sheer volume. Explosive. Absolutely explosive.
Really?
Yeah, the initial data totally confirms the policy hit its goal for volume and speed. In just the first few months after the April 2025 changes, Immigration New Zealand got 308 applications. Now, that represents about 1,000 actual people seeking residency.
1,000 people in a few months.
Yeah.
How does that compare to before?
Well, get this. In the 2.5 years before the changes, under the old stricter rules, they only received 116 applications in total.
Wow. Okay, so 116 over 30 months versus 308 in maybe 5 or 6 months. That's a massive difference.
Huge. an immediate success, at least in terms of attracting interest and potential capital.
So who are these people? Where are they coming from? Does the nationality breakdown tell us anything?
It absolutely does. It gives a fascinating snapshot of where global risk, or maybe perceived risk, is highest right now. As of August 2025, the United States is leading the pack, and by quite a margin. U.S. applicants made up 129 applications, which translates to 386 individuals.
Americans are number one. Interesting. Who's next?
The second biggest group is China, with 45 applications representing 152 people. And then Hong Kong is third, quite close behind, with 38 applications covering 113 people.
U.S., China, Hong Kong. So major global economies, places with significant wealth, but maybe also perceived instability or uncertainty.
That seems to be the takeaway. You're seeing significant numbers from these major powers, suggesting a sort of generalized hedging strategy against instability across the board.
But the U.S. number being so high is particularly striking. Is there specific commentary about why so many Americans are suddenly looking for a Kiwi escape route?
Yes, there is. Analysts discussing this huge influx, especially from the U.S., point pretty directly towards political factors back in the States. Well, the commentary suggests that a significant number of these U.S. applicants see New Zealand as a hedge against political turmoil at home. Some sources specifically mention people maybe being of a different political persuasion to the current U.S. administration, or just generally worried about increasing polarization, social unrest, that sort of thing.
So it's not just an investment, it's explicitly framed as geopolitical risk management.
Exactly. It's seen as a highly analytical move. If you're ultra wealthy and you think your home country might be heading into a period of deep instability or economic trouble, then buying residency in one of the most stable, remote, geographically secure places on Earth, that's viewed as a calculated, almost essential investment.
It's diversifying your life, not just your portfolio. Hedging against systemic risks, political breakdown, resource wars, civil unrest, things that money alone can't fix if you stay put.
Precisely. And this is where the AIP visa stops looking like just a financial deal and starts looking more like, well, like you said in the opening, an apocalypse escape plan.
Silicon Valley's ultimate insurance policy.
It really is the ultimate expression of wanting individual control when you perceive global chaos looming. For the ultra-rich, this Plan B idea isn't just about dodging a market downturn anymore. It's about escaping potential systemic collapse.
Whether that's pandemics, climate change triggering resource wars, AI disruption.
Right, all these big existential threats. And New Zealand, because of its isolation, its relative stability, it's long been seen in these circles as the ideal stronghold, the ultimate safe landing zone.
We hear the stories, the sort of modern folklore, the whispers about the Kiwi projects, but it's not just talk, is it? There's actual physical evidence of this mindset.
Oh yeah, it's very real.
I actually spoke to a contractor, someone who worked on one of these huge remote compounds down in the Otago region. His story was incredible. It just perfectly captured this Plan B mentality.
Yeah.
He said the place wasn't designed like a luxury home, it was like a fortress.
Right.
The owner, a big name from Silicon Valley apparently, was described as quiet, analytical, utterly obsessed with self-sufficiency, redundancy for everything.
What kind of systems are we talking about?
The level of detail was just staggering. Independent geothermal power, completely off the grid, really advanced multi-stage water filtration systems drawing from a mountain spring, dedicated satellite uplinks, he stressed, not for Netflix, but for guaranteed communication if all other infrastructure failed.
Wow.
And get this, a hydroponic farm big enough to feed 50 people. Indefinitely. The contractor said the owner talked about global supply chain collapse, political violence, with the same kind of cool, detached logic he'd probably use for debugging code. For him, New Zealand wasn't really a country to join. It was more like a physical structure, like securing a server rack in a really secure remote data center.
That analogy is chillingly perfect. And what's fascinating is how neatly this very pragmatic, almost cold Plan B strategy lines up with a specific ideology that's been really influential among some tech elites.
You mean the sovereign individual?
Exactly. That book from 1997 by Davidson and Rees-Mogg, it's become almost a foundational text for a certain kind of libertarian thinking in Silicon Valley.
Yeah, I remember the buzz around it. It basically predicted that digital tech and easy movement of capital would gut the power of governments, right? Empowering this new cognitive elite while making nation states kind of obsolete.
Precisely. And the core vision, almost a utopia for the wealthy in that view, is that they'd retreat into these secure enclaves, maybe physical, maybe digital, completely free from taxes, regulations, and critically, free from democratic accountability. They literally predicted the end of Western civilization as we know it.
And the rise of the sovereign individual who operates, how do they put it, like a god separate from ordinary citizens.
Like the gods of myth in the same physical environment as the ordinary subject citizen, but in a separate realm politically. That's the quote. It's about decoupling your fate from the collective.
And this isn't just some abstract theory discussed over coffee in Palo Alto. It has very real, tangible connections. Peter Thiel is the obvious example.
The poster child, really. He explicitly called the sovereign individual his greatest influence. It underpins his stated belief that freedom and democracy might actually be incompatible.
And his own actions reflect that, don't they? Getting New Zealand citizenship back in 2011 under controversial circumstances.
Hugely controversial. Granted, despite him apparently spending only 12 days physically in the country up to that point, it was such a public, almost brazen display of citizenship being transactional. Yeah. He called New Zealand utopia, the future. He even named his investment fund Valar Ventures.
A Tolkien reference, right? Valar, the sort of angelic guardians in Middle-earth's protected realm.
Exactly. The symbolism is deliberate. And then there's the physical proof. The renovation plans for his place in Queenstown that became public. They included detailed blueprints for a panic room.
A panic room. That really confirms the end times bolt hole idea. It's beyond financial planning. It's high-stakes physical security planning for systemic breakdown.
But this whole pursuit of a private utopia, it obviously raises huge ethical questions within New Zealand itself. I read a really powerful critique from a respected Maori legal scholar.
What was the argument?
She argued that the way these billionaires talk about New Zealand as this empty, available utopia, well, historically, that's the language of colonialism, of erasure.
Seeing the land and its stability not as something created and maintained by its people, but as just another resource to be claimed and secured by the global elite.
Precisely that. The argument is that this mindset where the most powerful people are building escape pods instead of using their massive resources to help fix the problems in their home countries, problems they sometimes contributed to. It represents this profound abandonment of any idea of a shared future. They're just opting out.
It's a devastating critique. But the New Zealand government would argue back, wouldn't they? That the policy isn't just about passive cash. It's about importing opportunity, expertise, the active part of Active Investor Plus. We should probably look at their best case scenario.
We should. Because the policy is designed, at least on paper, to generate those positive results.
Yeah.
I came across a story that perfectly illustrates what the government hopes the AIP visa achieves.
Yeah.
It focused on the quality of the investment. Imagine this young entrepreneur, Maya, based in Christchurch. She'd developed this really innovative ag tech system. Using AI to optimize water use in vineyards, a huge deal for sustainability in NZ's wine industry.
Right, that sounds exactly like the kind of high-value productive sector they claim to be targeting.
It is. But Maya was completely stuck. Local venture capital. Scarce and notoriously shy about investing in complex, deep tech like hers, she was apparently weeks away from just giving up on the whole project.
Okay, so what happened?
She got connected with an investor from Singapore, a Mr. Lim, who just got his AIP visa under that growth category we talked about. And here's the key part. Mr. Lim didn't just wire the $5 million. He invested his time too. Flew in, spent weeks with Maya's team offering mentorship, and crucially, he used his own network to open doors for her. In the Asian market doors she could never have opened herself.
Ah, so he was genuinely active, providing more than just capital.
Exactly. That's the active bit the government wants. And the results. Measurable. That little startup now employs 15 highly skilled local people. Their tech is making vineyards in Hawke's Bay measurably more sustainable. So for the government, this is the policy working perfectly. Importing knowledge, connections, market access, not just money that directly helps local industries and hits national goals like sustainability. This is their justification for putting up with the social friction.
It's a compelling ideal scenario, but it sits in really stark contrast to the social friction it also creates, which predictably seems sharpest around housing.
Yeah, if you connect it back to the bigger picture, the societal cost is impossible to ignore, especially in those really desirable areas. Queenstown, parts of Auckland, the South Island, where foreign money has historically concentrated.
I read this story about David and Hannah, a teacher and an electrician in Queenstown.
For years, they kept trying to buy a modest family home, and they were consistently outbid, not by other local families saving up, but by these faceless cash offers, often way over asking price. Homes bought sight unseen, just treated as portfolio assets by overseas buyers or entities. David and Hannah described feeling like, well, like strangers in their own community. Crushing.
And we have to remember the context here. New Zealand's housing market has been uniquely vulnerable for years. It wasn't that long ago, to 2016, I think. They actually topped global charts for house price inflation, like 11% annual growth.
Yeah, housing unaffordability wasn't just a problem. It was a full-blown systemic crisis. It hit first-time buyers, younger generations, marginalized groups the hardest.
Which is what led the government back in 2018 to bring in that ban on most foreigners buying existing homes, right? The Overseas Investment Amendment Act.
Exactly. It was a desperate measure to try and curb speculation, protect the housing stock for locals. But even then, its actual effectiveness was questioned. The data at the time suggested foreign buyers were only involved in maybe 2% to 3% of transactions anyway.
So, if they weren't the main driver of the crisis, which had deep roots in domestic supply problems, planning laws, etc., then maybe the 2018 ban was more symbolic than anything.
A political move.
Arguably, yes. It addressed the symptom people were angry about, but maybe not the underlying disease. But now, by creating these new, streamlined ways for the super rich to get residency and invest even with the property development rules, the AIP visa definitely risks reigniting all that old anger and anxiety. It reinforces that perception, fair or not, that the government cares more about foreign capital than about the basic housing needs of its own people.
And that leads us straight into this really jarring paradox of mobility we touched on earlier.
It's stark, isn't it? You've got this influx of ultra-wealthy non-citizens essentially buying stability, buying the right to flee trouble elsewhere via the AIP visa.
While at the exact same time,
New Zealand citizens are leaving their own country in record numbers.
the outflow statistics are genuinely painful to look at. They really are. Statistics New Zealand reported a net migration loss of 73,400 Kiwis between July 2024 and July 2025 alone. 73,000.
And who are these people leaving?
Typically middle-class professionals. Nurses, teachers, skilled tradespeople, young graduates. They're leaving for better wages, lower cost of living, more opportunities, often heading straight across the ditch to Australia.
That juxtaposition is just brutal. The country rolls out the red carpet for foreign billionaires, fast-tracks their residency, while hemorrhaging its own essential middle class, the very teachers and electricians like David and Hannah who actually make the country run.
It perfectly illustrates this deep divide. Wealth buys the ultimate freedom, the freedom to opt out of your country's problems. Meanwhile, the citizens who rely on the state, who contribute daily, are being forced out by basic economic pressures. National identity itself feels like it's becoming just another commodity on the global market.
So if we try and synthesize this whole complex picture, it seems like the New Zealand government has made a very calculated, almost cold, rational bet.
I think that's fair. They're betting that the potential economic upside, that high-quality, targeted stimulus they hope comes from the growth category investors, is worth the social friction it inevitably creates, especially the heat around housing.
The Active Investor Plus visa feels like a direct product of this moment in time. A world where national stability, even identity, can be leveraged, packaged, and essentially sold as a premium asset to the global elite.
It reflects that shifting dynamic perfectly.
And the way this wealth is flowing across borders, enabled by programs like the AIP visa, it really suggests something fundamental is happening, doesn't it? It feels like the people with the most resources are increasingly decoupling their own futures from the fate of the nations that, ironically, probably helped create their wealth in the first place.
They're quietly demonstrating that in a world that feels more and more turbulent, maybe extreme wealth provides the ultimate liberty, the freedom to just opt out of our shared collective fate.